Hello, everyone. My name is Simon Taylor, and welcome to episode 2 of the 11FS Newsroom. In this weekly show, we take a deep dive into the biggest news story of the week. We want to figure out what the story means for the industry and who's going to be impacted, who's going to benefit, and what might change in the industry going forward. Before we get into the show, this episode of 11FS Newsroom is brought to you by Radar Payments, as you can see their logo just up there, who are connecting payments to commerce worldwide. Radar Payments believe in a world where payments resume in one single click, tap, or a wave. They take out the complexity of payments and let banks, neobanks, PSPs, and fintechs solely focus on delivering frictionless customer experience. The white label one-stop service lets you issue payment instruments, accept the widest range of payment methods online, in-store, in-app, in over 100 currencies, and run your own payment business, putting you and your brand at the forefront. You can find out more at radarpayments.com. Right, that's my notes. Today, we are, of course, talking about Seedrs and that Crowdcube merger. That was announced yesterday. And if you live under a rock, well, that's the big news. My Twitter feed had nothing but this story. So let's just cover off a little bit about what actually happened before we invite some guests who know a little bit more about it than us. So the UK's two largest crowdfunding platforms, of course, Seedrs and Crowdcube, have announced their intention to merge. The deal is, of course, still subject to competition authority approval, but if the deal goes through, it will mark a significant shift in the crowdfunding landscape. The two firms, who say more than £2 billion has been raised across their combined platforms since 2011, are hinting at a bold new strategy to include marketplace access to larger private equity level deals for investors. Jeff Kelisky, Seedrs CEO, will serve as the CEO of the combined company, and Crowdcube chief Darren Westlake will become executive chair. So to discuss further and what this might mean for the industry, we are joined by Luke Lang, who is both co-founder and CMO of Crowdcube, and Jeff Kelisky, who is the CEO of Seedrs. Luke, Jeff, how are you doing? Luke, really good to have you on the show.
It's good to be here. Yeah, looking forward to the chat.
I'm looking forward to learning more. And Jeff, who has a little bit of a sound delay. Jeff, how are you doing? Thank you so much for being with us.
Not at all. Brilliant to be here. Very nice to be able to speak to you and the team, Simon.
Thank you so much, gentlemen. Talk about timely. Audience, I'm sure you've got lots to ask our guest this week. We did have some technical issues, but we do not have a lack of questions we can take. So please get those comments in the sidebar, and our guests will be answering them so you can hear directly from the people deeply involved. Let's start by learning a little bit more about our guests. Luke, do you want to give us the background? Tell us the story of you and sort of Crowdcube. I'd be super interested.
Yeah, so I launched Crowdcube back in 2011 with my co-founder, Darren Westlake. And Crowdcube was really born out of a passion for entrepreneurs and entrepreneurship. And all those great businesses that are pushing at the edges, trying to challenge the status quo with new ideas and innovation. And we really felt strongly back, I guess it was towards the end of the financial crash as well, where finance for startup early stage businesses was, quite frankly, in short supply. Banks were no longer lending, traditional angel networks had fallen apart. And Darren Westlake and I really felt that we could make a difference there. And we saw across the pond the likes of Kickstarter starting to emerge at the tail end of 2009, 2010, and really felt that we could do something similar here in the UK. But we wanted to take it that one step further and introduce the equity element to it. So we really pioneered equity crowdfunding. And we were also really conscious as well that prior to Crowdcube, equity investment was really the preserve of the wealthy and the well-connected, and we wanted to change that. We wanted to democratize equity investment and make it much more accessible and affordable for everyday people. And you fast forward to today, and we funded 3 unicorns: Monzo, Revolut, and Brewdog. We've completed well over 1,000 raises on the platform, and as you said earlier, we've had over £1 billion invested into campaigns over the last 10 years or so. So it's been quite a roller coaster ride, but we've certainly had our impact on the UK and indeed across Europe.
Absolutely, and it's a really interesting story of how crowdfunding's developed, and I think that financial inclusion thing is something I want to come back and unpack. But Jeff, what about you? I know Seedrs has an interesting backstory too.
Yeah, absolutely. I mean, our journey in some ways was started with with the same premise. Jeff Lynn, actually, our founder back at the same time, was looking at a marketplace which effectively, was in classic terms suffering market failure, and raising capital for businesses. Really didn't look all that much different from the 1700s, when merchant ships went out and were funded. And so if you wanted to raise money, you would go to Mayfair, find a wealthy benefactor, and lo and behold, even 10 years ago, if you wanted to raise capital, you'd go to Mayfair and you'd try and find the same individual. And so it was really an opportunity to change the landscape of private company investing and solve that market failure and really market by market in finance. You've seen the sort of democratization happen, from its early introduction. And so, Jeff Lynn, I guess coming at it from a lawyer's background, really focused on trying to create, a scalable legal framework which could serve the masses and be fair to all. And so that's what kind of got it started. A similar time, and since then, very very similar to Luke's story. Was little by little getting to the point where now, we've done over 1,000 raises. Just under $1 billion through the platform. And one of the dimensions that we probably focused on a bit more, perhaps because of Jeff's legal background, was the secondary market. And that was something that we launched back in 2017. And really it was around trying to create greater liquidity for investors who already are on a long journey, because we all know that early stage businesses take anywhere from 5, 7, maybe 10 years to exit, and that's a long time for investors to have their money tied up. And so, if there's an opportunity to actually allow investors to exit, get returns, and reinvest in the next great business, we wanted to be there for them. And so, what we're seeing now is actually that the greater efficiency and liquidity in a private market become more and more important. And we're seeing more and more businesses in the US, here in Europe, trying to play a role in increasing efficiency in private company investing. We think combined now we make a significant difference to the landscape. Over to you.
Interesting to see, Jeff. Thank you so much for that background. And I think super interesting story and some definite parallels there in terms of the gap in the market. Before we get into this merger specifically, Luke, we were talking before the show started a little bit about kind of that gap that I think Jeff alluded to, where for so many investors, there was unless you knew somebody in Mayfair or you were an investor in Mayfair, you didn't get access to these growth businesses. So there's always been this tension between sort of financial inclusion and access to growth companies versus really risky businesses that might go bust. How did the crowdfunding industry in the UK really deal with that, Luke?
I think, if I look back, I think people in the UK, we've always taken the view that, provided people know and understand the risks, which we make sure that they're aware of all of the risks, they need to complete a risk assessment prior to investing, then we should treat these individuals as adults, right? Just because you've got a lot of money doesn't necessarily mean you're more prone to making good investment decisions. And we really felt strongly that we wanted to democratize investment, and we wanted to open it up and make it a lot more accessible. As Jeff said, equity investment in the UK hasn't really changed much in several hundred years, let alone several decades. And it felt deeply unfair that rich, wealthy individuals had access to these exciting, ambitious, high-growth businesses, and ordinary, everyday folk like you and I, quite frankly, did not. That felt deeply unfair to us. And we made it our mission to change that. And I guess the clearest statement that we made was by making, allowing people to invest from as little as £10. That's really opened it up to allow anyone to be able to invest as long as you understand the risks and you're over 18. And I firmly stand by that. It's really important that more and more people have access to these types of investments. So that they can build their portfolios, they can diversify, they can learn about business and investing, and hopefully they can share in the success of some of these businesses as well.
Absolutely. It's interesting that in the recent couple of decades, companies have started to reach the public markets a lot later. So they IPO later. A lot of their growth has already happened. So the ability for everyday investors to take part of a growth story in a business is a lot less.
Yeah. If you look at some good examples, if you look at Monzo and Revolut are two brilliant examples of challenger banks, both raised with Crowdcube, and Monzo's raised with Seedrs as well. They raised with us back in 2016. Both had relatively modest valuations at around 30-40 million pounds at that time. Revolut is now worth 5.5 billion pounds. Even the most well-connected of angel investors in the UK probably wouldn't have had access to those types of investments before Crowdcube. So it's truly remarkable and amazing that we've enabled not just dozens of people, but thousands, tens of thousands of people to back some of these types of businesses.
Absolutely. So Jeff, I'm going to throw it to you. There's all kinds of questions coming in from the audience, but let's get to the merger before we get to the audience's questions. Tell me the story. How did this all come about? Was there a candlelit dinner? What was the story there?
A seance, and I'm sure some religious events. No, actually, it was a conversation that probably was initiated many years ago, probably around 2015, between Darren and Jeff Lynn, as a sort of almost an idea that was posed as, what if? And over the years, there have been a number of points where that conversation was engaged. So I think in that journey, with each conversation, we matured our businesses and evolved our thinking, and grew both businesses. And I think it was, with each stage of market evolution, we could see that we were really tackling the same problem, however, approaching it differently. And what we found over the years was that we had very complementary strengths. And those complementary strengths, in fact, grew. And in the most recent, time, over the last sort of 6 to 12 months, what became clear in a number of ways is two things. The first is that, this is a game of scale, that there is a lot that we can do together by bringing the strengths of both businesses to the market, in the sense that the investors are their job is made a lot easier with one platform, and in serving the entrepreneur community, there is a large number of businesses of many shapes and sizes, from seed to pre-IPO, that we could do a better job of serving. And scale is actually quite key in doing it well. The other dimension is really quite interesting, and that's something that's really only come about in the last, I'd say, 6 to 12 months. If you look at the growth in new entrants and in the existing entrants who are now trying to play a greater role in either making more efficient or providing services to investors in private or businesses in private. You made the point yourself, Simon, that there are more businesses starting up, and those businesses in private are staying private longer. And what you get, I mean, in one of my investor meetings recently, there was, there's almost this bow wave of money which is stuck in private, and they're looking for ways to serve that. And so we now have companies that are cap table management tools that are looking to play in this game. Carta has made their point clear. Mergers like Forge and Shares Post in the US, Equities Zen. There's probably 15 to 20 companies that are now clearly stating goals around servicing this segment of private capital, which is very large. And yet we sit here, both of our companies, much more advanced, much larger in being able to serve them, but combined, actually, it allows us to stay on the front foot. And so, one of the key changes in the conversation was the world is changing. The world of investing in private is changing. And if we wait, there's a window that we miss. And so, it was really, that was one of the things that unlocked the conversation is, we've been getting to know each other. And the more we got to know each other, the more we realized actually, although we compete, we had very common views and some common cultures in our businesses that we built and common passions. And we did not want to let the opportunity go. So, so that was very much, I think, what's crystallized the merger this time.
It makes a ton of sense, Jeff. I'm interested to throw this open to the audience. There's some good questions coming in already, and Luke, I'll start with you because I think Jeff prints a phenomenal background there. But I guess there's a really good question here from Glenn that sort of leads on to that point, and I think Jeff sort of covered it. But Glenn asks, would love to hear the view of where the new company fits in the market. Is it primarily a retail platform providing capital to startups and investment opportunities, or do you see it moving more into this private equity marketplace and helping unlock the institutional money as Jeff was talking about there? Because it is a phenomenal problem for all stages of investors, is that finding exits is harder than ever before. Or is there some tension between these things?
I think it's a balance. I think it's a mixture of the two. I think what you've seen over the last 4 to 5 years is the stage of businesses that are raising with us are getting later and later stage. They're getting higher growth scale-ups businesses, and they're raising increasingly larger sums of money as well. And I think with changes to the prospectus rules last year, which meant that it increased from a €5 million cap to an €8 million cap, we've seen a number of businesses take advantage of that this year alone. So I think more and more businesses of later stage are starting to understand the benefits of raising capital through the likes of Crowdcube and Seedrs beyond purely just the capital. It's well known now that we lots of businesses that raise with us have secured private equity or venture capital fundraising alongside it, and they execute a crowdfunding campaign in tandem so that they can raise capital. Let's not knock the fact that they're raising £6-7 million worth of capital. That's really important, but also it's increasingly evident that it's important for them in terms of building their community and turning customers into shareholders. But I think Jeff makes a really, really valid point that businesses are staying private longer. You look at the number of IPOs in the UK this year. Well, last year was pretty dismal. This year is absolutely terrible. And that is partly driven by these big private equity mega rounds of hundreds of millions of pounds being pumped into the likes of Revolut and Brewdog, for instance. So businesses are naturally staying private longer, and that's creating tensions for shareholders, and not least early shareholders and investors in these businesses, as well as crowd investors. And I think there's a real opportunity there for the combined businesses to play a role in solving that problem.
Absolutely. I think that space is super interesting. There's another question from Glenn, which sort of says, given the harmonization of equity crowdfunding across Europe, can you see a European expansion? Because previously, I think at least Seedrs was going to say UK centric. And Jeff, I'm going to throw that to you because Jeff, you mentioned a lot about kind of the US market has smaller businesses getting a lot of attention in this space, but actually here both Seedrs and Crowdcube is bigger, is proven, and is on the route. And I do think there is a bit of a discount on European businesses. That's my own opinion, given some of the impact it can make. But is European expansion something that you guys are considering, Jeff?
Oh, I love the question. Absolutely. I think you've hit a hot button there, Simon, with that question. So Europe has always been on the cards for both of our businesses. I think we have folks in Germany and Benelux, and I know that Crowdcube in Spain, And we've each had some success in Europe, but the regulation has been challenging. And just yesterday, clearly your audience is well up to speed. Just yesterday, Parliament passed the crowdfunding law, which effectively regulation, which allows us to operate across Europe as a region in a way that we've operated in the UK. This is a long time coming. I think Jeff Lynne, our founder, was probably in Brussels for much of 2019, working on that. As his fingerprints, I think, are on that. And we've been very much looking for it. We were hoping this was going to happen a year ago. So, I think we are absolutely delighted that, both Crowdcube and ourselves have had our eyes on Europe. It is absolutely the next stop before the US. The US, and I realize I say this with an American accent, is a mess in terms of its regulatory framework for this. And, there's even a video of Jeff Lynne presenting to a congressional committee in Washington, but which was before the Jobs Act. But it's difficult. So we will absolutely kicked off.
Jeff, you can't stop the calls happening.
Deal. Everybody's calling.
Yeah, no, it's going to happen, isn't it, Jeff?
No, so I'll just wrap that up. So Europe, we're very excited about Europe. It is absolutely the next stop, and we believe that because the UK has been more progressive in its regulation, it has allowed us to reach a scale which gives us a window of opportunity, which puts us ahead of any local competitors right now in Europe. And again, we want to seize that opportunity to use the strengths of both of our companies, this new regulation, to move quickly.
More investors, more markets, more potential companies is certainly exciting if you've got some harmonized regs to be able to work with. I also think this is, again, a personal perspective. There's a lot of value for US VCs to look at Europe and figure out models that have worked here and then see how do you make the regulation stuff happen in the US. It'll take a little bit longer, but you could potentially get there. But enough editorializing from me. We're pushed against time, so I'm just going to finish off with one question here for you, Luke, which says from Paul Loberman, which shout out Paul, great question. Will you be combining investor platforms for a single investor view, and will you be providing an API so that open banking account aggregators can include your data in apps? So two quite specific roadmap questions, but if you can answer it, please do. I thought it was an interesting perspective.
I guess absolutely the ambition and the vision is to create a unified platform. Mm-hmm. There's tremendous benefits in doing that for all of our customers, for entrepreneurs, for investors, for our partners as well. So kind of bringing all of that together, unifying the experience, so that we can focus. Ourselves and Seedrs have got 10 years experience, expertise, and insights, and I'm sure Jeff is the same as me. I'm itching for this deal to get approved so that we can get together and start putting this business together and building one platform to dominate them all, not just here in the UK, but in Europe and further afield. So one platform for entrepreneurs to list their businesses, combining our investor communities as well, creates a really tempting opportunity for businesses as well. That investor community is going to be huge. That they'll have access to. Regarding the API for open banking, I honestly can't get into that level of detail. We haven't got into that level of detail for obvious reasons, and we won't be getting into that level of detail for some time until the deal is completed. But I mean, it certainly sounds like an interesting prospect and something that we should definitely be putting on our roadmap at some point in the future.
Definitely. Shout out to Paul Loberman. Right, Jeff, just before we wrap this one up, I'd love to get your perspectives on, what's next? What are you looking forward to? What are you excited by?
God, what a wide-ranging and open question. I think that the opportunity in private, as we mentioned earlier, is only getting larger. And there is an unmet need. both for the entrepreneur and the investor. And I think what we're very much looking forward to now is being able to put 100% of our energy into serving the customers on both sides of the market, where we can put all of the energy into one platform, one set of developments, so we innovate faster. In terms of our distance from the competition, we will already be ahead, but we want to move more quickly, introduce innovations. I think, the dimension, I think Luke's absolutely right that in terms of our product roadmap, whilst that's not something that we've dug into, there is a dimension to the question before, which, is clear. We very much want to be part of the infrastructure of the private ecosystem, and that means integrating into it. And so in that sense, to be a part of the fabric of private transactions that support retail investors on up, that support startups on up, is absolutely the long-term play. So I don't use the word game-changing lightly. Absolutely is a game-changing event, and it's now up to the combined management teams to bring it to life.
That's a super exciting place to leave it. So we sort of started a little late, so I don't mind finishing a little bit late on this one. So thank you everybody so much for being involved, and I'm sure audience, you've all got days to get to. But before we close out, Jeff, where can people find out more about you and everything that's happening at Seedrs?
Well, you can certainly reach out to me directly if you want at jeff.kelisky@seedrs.com. Happy to engage and reach in, and we definitely want to speak to investors and entrepreneurs alike.
Fantastic. How about you, Luke?
Crowdcube.com is very much the place to be. So yeah, head over there and look at some of the investment opportunities. And yeah, if you want to get in touch because you're looking to raise finance, then it's just Luke at crowdcube.com. So nice and simple.
Brilliant. Well, that's all we have for this week, but do not miss our other show, Spotlight, which goes live on Thursday at 3:30 British Summer Time or 10:30 a.m. in the East Coast. Have a great week, everybody, and thank you so much, gentlemen, for joining me.
Brilliant.